Hi, I'm Bruce Thompson. I'm with Thompson Insurance Agency. I handle business insurance here at our agency, and I want to talk today about the commercial property policy and some of the shortcomings included in it. We're in Weymouth and in New England and really the Northeast in general. What you see a lot of times in commercial properties is older buildings. And the problem with that is the commercial property policy, in the event of a loss, pays for the building to be replaced as it existed before the loss. What happens in the event that there's a local, a state, or a federal ordinance that makes requirements in order to rebuild that certain new codes need to be complied with? Let's say it's got to be ADA compliant. Let's say there's got to be sprinklers installed in the building where there weren't previously. What about the additional cost for those? Well, left without an endorsement that we call building ordinance or law for short, the property policy won't pay for those things. Again, it will pay to replace the building as it existed prior to the loss. So the solution is or law. It's an endorsement, and again, I think the easiest way to think about it, it's the additional cost to comply with current building codes in the event of a covered property loss. It takes on three shapes, if you will, or three different portions of the policy. A is the undamaged portion, and a lot of times what will trigger that is the damage to the building is 50% of the total square footage or more. If that's the case, oftentimes the undamaged portion needs to be torn down, the debris needs to be removed, and we're going to have to rebuild according to the new code. B is the demolition cost. What's it cost to remove the debris of both the damaged and the undamaged portion? Well, it's 3 to 5 times square footage, and that's a general rule. Let's just use an example. We've got a 25,000 square foot office building. If you take 4 times the square footage, 25 times the 4, that's 100,000. So let's just use that as an example. Let's say that's a benchmark. A $100,000 demolition limit may be something to consider. However, there may be some hazards in that building that make that number inadequate. For example, it's an older structure, maybe there's some asbestos and some materials in there. They're going to cause additional cost to get rid of the demolition. So those are considerations when we look at selecting that limit. Under 3, that's the increased cost of construction. And that's, again, that gets at what are we going to pay to rebuild the building according to the new code? Not the way it looked before, but what dollars do we need to rebuild that building to comply with the new code? And a consideration, a strong consideration there would be the occupancy. If we've got a doctor building, if we've got a food establishment that, let's say, needs to be rebuilt now with sprinkler systems and certain fire suppression and protection systems that weren't previously in the building, we need those additional dollars to be able to pay for that increased cost of construction. I hope this helps. Thanks for joining me again. I'm Bruce Thompson. I handle business insurance at Thompson Insurance. We hope to hear from you. We'd love to be of service to you. Check us out at www.samsonins.com.